This podcast is brought to you by Consolidation Coach, the leading M&A consulting firm in the collision repair industry.
Hey there, it's Jason Stahl with another episode of Consolidation Nation. And as usual, I have a very special guest on the program today, Laura Gay, who is the president and CEO of Consolidation Coach. Welcome, Laura.
Thank you, Jason. Absolutely awesome to be here again with you. Thank you so much.
You're welcome. Great to see you again. And we have another special guest who is Herm Stonitsch. He is an analyst for Consolidation Coach and a registered CPA. Welcome, Herm.
Thank you. It's a pleasure to be with you guys today.
We are going to talk about one of the most boring topics, and that is accounting. Clean accounting, why it's important, and we're going to do our very best to make it as spicy and fun and interesting as possible today.
Great. It sounds like a fun time. So let me just start with, what does a clean accounting look like?
What clean accounting looks like is basically every profit and loss statement, which you should look at all the time, at minimum once a month, but more regularly than that, should have a section for your income, your cost of goods sold, and your actual expenses. And it's important to understand what should go into those three categories. And for that, I'm going to pass it over to Herm. Herm is our resident CPA and analyst. He is our numbers nerd, and he is the one that helps me and the rest of the team at Consolidation Coach. He helps us help our clients get their books cleaned up and get them, if they're thinking about selling, helps them get, ready to sell. Or if they're just wanting to get their books cleaned up, Herm does that as well. So Herm, why don't you talk a little bit about, what should be in the income section, what should be in your cost of goods sold, what should be in your expenses, and the importance of why things need to be where.
Let me say that after many years in the field, that I've seen from soup to nuts as far as people that are very well organized with their accounting and those that are not. And oftentimes it boils down to whether or not they've got a solid accounting person or bookkeeper even in their business, or they use an outsider, or maybe they've got their marketing person or their daughter or son or somebody keeping the books. And sometimes that can work out and sometimes it doesn't. But having a good handle on your bookkeeping is critical. I think when I was in school, they'd say that accounting is the language of business. And clearly, if you don't have things really well organized, it becomes a complete mess when somebody is trying to either run their business, which is the primary purpose of this discussion, or if somebody wants to take a look and determine what your business is worth, or assess the business that they're thinking about buying. And so those various categories become very important. And when they're jumbled up, it becomes nearly impossible to make heads or tails of it.
For example, in your income and your cost of goods sold categories, you should have an account that is the same account in your cost of goods sold. So you should have, for example, body labor income, and you should have a body labor expense account in your cost of goods sold. And the reason why you want to do this and have an account that matches each one of those categories is it makes it easy for you to quickly identify where there is leakage, where you're potentially losing money. If you're not doing this and you're just simply, putting, sales and whatever your gross sales are and not breaking down the accounts and then breaking it down on your cost of goods sold, and you are losing money, you're never, ever going to be able to figure out where that money's getting lost at, ever, right?
Right. Yeah, I think it is critical. And, if you throw it all in one big bucket for both revenues and cost of goods sold, which should be distinguished from your overhead operating expenses, but keeping that those various separate buckets for labor and materials and other paint, let's say even paint as segregated from other materials. Keeping the revenue and expenses separate for each one of those allows you to make that analysis after the fact, let's say monthly, probably the best idea, certainly quarterly. And you can spot areas where you've got problems. Now, you may not be able to set prices very easily depending on the insurance companies and stuff like that. But if you're selling things without making a margin on it, you have no hope of creating some gross profit to pay for your overhead. And so this can be an early warning system to determine if your gross profit margin by category is staying in line with what you're hoping for. That's not to say you're going to have the same kind of relative margin for each one of the various categories. You may have better profitability in labor than paint or whatever. But it's important to make the effort, and usually from the very beginning, of making the effort to keep these costs and revenues separated.
Let's talk about, guys, expenses that you run through the business that will not exist for a future owner, separating those and why. If we're looking at a shop that's looking to get out, talk about that.
So let's be real. Every single body shop, or I should say dang near every single body shop, runs expenses through their business that won't exist post-sale. I recently had a client that had a very large racing operation that they ran through their business as advertisement. I've got another client that has a whole lot of classic cars that they run through their business. Again, these are all sources of advertisement for them. It kind of sets them apart, makes them kind of a niche. So they're absolutely business expenses, but they're not expenses that, a new owner is likely going to take on. They're going to have their own model, their own niches. So all of these expenses that you run through your business, whatever they are, and I'm not here to judge, you should really have a way to track those and identify those, because when you go to sell, you're going to want to know what those expenses are, and you don't want to have to go on some huge, we'll call it hunting expedition. So if you start thinking about putting those expenses in certain accounts and calling them what you wish, maybe you have several accounts. A good example of this is dining out. A lot of customers have a lot of dining out and travel and things like that. And maybe you've got two different accounts, for that. Maybe one is like travel A, travel B, for example. And then being able to have it clean and cut. And then, these are the actual expenses that will exist post sale. And these are the expenses that won't exist. So that when you're trying to create a list of what those actual expenses that won't exist post sale, it makes it super easy to put it together. I have one client that I think right now we are solidly 2.5 months in trying to help them to create a list of all of the things that they run through their shop that won't exist post sale, because it's so scattered through their P&L. And we get to the bottom and we think we have everything. And then they come back and they're like, oh, I remember this. Oh, I remember that. And there's nothing wrong with that. But gosh, it's so difficult for them. Like, I can't imagine. And I know they've been telling me that they've been waking up in the middle of the night, at 2 a.m, thinking about this stuff. And nobody needs that monkey on their back. You know what I mean? And it's such an important part of selling, when you do decide to sell, because ultimately, whatever expenses that you run through the business that won't exist post sale are going to significantly increase the value of your shop post sale, or at the selling point, I guess I should say.
One reason it can take a long time, if you're not trying to keep an eye on this as you go, is that when we take a look at a company that is considering selling their shop, we're looking at several years. It might be 3 years or 3.5 years or 4.5 years. And if that's the case, I've actually had clients I'm chatting with about, let's see what we call ad backs. What kind of ad backs do you have? And some of them start off with, well, I'm going to have to start looking through the accounting records. And I'm thinking, oh boy, that's the last thing I would want to do, because they're talking about maybe 50 to 75 different expense categories, 4 years and 12 months per year. And that's why, Laura, as you point out, sometimes it can take, a week or 2 or 3, and we're like, well, we're only halfway done. That's because you're just like scanning. I would point out one thing, and that's that, we don't really worry too much about if you sponsor a little league team for $150 a year, and maybe a new owner's not going to do that, but maybe they will. It's just not enough of a dollar amount to get too worried about. But the key here is that businesses, one of the ways, there's several, but one of the ways to value a business is based upon the profitability of your business. And a buyer is going to consider, well, how profitable will the business be if I were to take it over? And if that happens, and you've been spending money on things that, we will end up determining are good add backs to use, that's going to increase the profitability of your business, which is going to increase the valuation of your business. So it's absolutely in your self-interest, if you are going to sell, to think about this carefully. I always counsel people to not get too, not to be hunting too hard for this. I don't want people to stretch the truth because, it can destroy your credibility. And people may say, well, I don't know if I want to work with this guy after all, or that now I may have to dig in a lot more due diligence. But it's really important. And as Laura points out, that most of the time, these are not anything that's going to cause red flags with the IRS. It could be that you've got a really profitable shop and you decide that you're going to have, you're going to be driving a Mercedes and the business is going to pay for your Mercedes. And that maybe you've got so much profitability, you pay yourself a really, really handsome salary, maybe double what you used to pay yourself 20 years ago or 10 years ago. That's fine. The IRS is more than happy to have you accept all kinds of wage income. But a buyer is looking at like, okay, you got to think from their point of view. Let's just say it's 200 grand. Buyers are going to say, well, I'm going to replace you with a general manager, and I might only have to pay that person $95,000 a year. It depends on your market. But therefore, you've got an extra $105,000 a year in this example that would be considered an add back. And that could be worth a few $100,000 added to the value of your business, just that one line item.
In the beginning, I said, and you and I talked about it, Laura, that there's, whether you're a shop that's looking to sell or you're a shop that's looking to stay in it for the long haul, clean accounting is important for both those types of shops. So let's just take the shop that is looking to sell. Talk to me about why clean accounting, bullet point for me, why clean accounting is important for that shop that wants to sell.
Well, like we've been talking about, figuring the add backs and being able to quickly pull them out and it not being a 2-month charade is a big reason. Secondarily, when you're going to sell your business, you're going to go through a financial due diligence, which is typically a very thorough quality of earnings. Think of it as an IRS audit on steroids. They're going to basically go through your financials top to bottom. They're going to have a bazillion questions. You'll answer those questions. They'll have more questions. They'll send you more questions. I mean, many, many times my clients will go through 7, 8, 9 rounds of questions. Obviously the first list is super long and it gets shorter and shorter and shorter, but one question leads to another. So if the accounting is clean, it just makes it easier to get through all of that financial due diligence, if you will. And then lastly, as Herm mentioned, there's many methods on determining the value of your shop, but the gold standard for determining the value of the shop is using basically based off of profitability. So the more accurate it is, the better it is to show the profitability. Additionally, when you have clean accounting, it will show like what the business has been doing consistently. A lot of times when people realize their sale, like the sale should be realized, for example, when the actual sale is delivered to the customer. Like when the customer comes to pick the car up, that is when the sale should be realized. We have clients that realize the sale when they get the insurance checks, and which could be 5 months after they've done the job. So then that creates volatility in financials. So it's important to have or to follow, we'll call generally accepted or GAP principles when you are doing clean accounting. And these are things that your accountant can absolutely help you with. And if you don't have, a lot of times, and again, I'm not picking on you, Herm. I love you. You and I communicate great. You're not the normal CPA, you know what I mean, that we see or talk to. But I just feel like a lot of the CPAs that I deal with are very hard to communicate. I just feel like their number of people, their mind thinks differently than ours. But if you can find somebody that gets the collision space, that gets you, understands your goals, that's willing to educate you and talk to you in English and not French, I think that's a huge part of it. And finding that person is a needle in a haystack. I'm not going to sit here and lie to you. No, you cannot have my Herm. Herm is mine. I'm just kidding. Seriously. But there are a lot of people out there that do a great job in this, and it's just finding that niche person. But I think that's really a big key element, is finding someone that speaks the language, understands you, understands your goals, and does a little bit of hand-holding to help you get to having clean accounting. And Herm said earlier about, like looking at your financials quarterly. Well, I don't agree with that. I love you, Herm, but I feel like as a collision center, you should at minimum be looking at your financials once a month. As a shop owner, there's many ways to report your accounting to your QuickBooks or whatever accounting system that you use. But with CCC, if you're on that, or many of the other management systems, you can import multiple times a day and have accurate financials by the end of the day of whatever is going on if you're following normal GAAP principles. And you can actually see where things are absolutely every single day. So, I think at minimum once a month, in my opinion, once a week, if you're going to be somebody that's really going to be focused, on really making sure that you are, being as lean as possible and having the best profitability, because it's so easy for leakage to occur. I mean, it's just so easy. Parts not getting posted, you've got somebody on a bad day, or you've got an employee that, got sick and went home and is out for a week or whatever, or, paint material bills got lost, or paint walked out the back door, or somebody's hammering too much primer on a car, or they're over mixing paint. There's just so many ways to have leakage, and it's important to stay in front of it.
To your point, Laura, the next question I was going to have was, if you're in it for the long haul, why is clean accounting important? And you just mentioned one of the reasons, to identify leakage, loss, or theft very quickly.
Yeah. And honestly, most of the time I think in body shops, the biggest thing that I feel that shops, especially when I see folks' financials over and over, I feel like the biggest problem that most shops have as far as leakage and loss, it's usually honestly mistake. It's not employees being ugly or stealing or anything like that. I mean, obviously that does happen, but a lot of times it's just lack of knowledge. And, I think one of the biggest things is, and specifically in the paint shop or even in the body shop in general, I don't think people really understand what things cost, what a roll of sandpaper costs, what the primer that they're mixing costs. And that was one thing I did in my shops. We would once every 6 months or so, we would get together, bring the invoices out, and talk about what all those things actually cost. And when you start thinking about, wow, this sandpaper roll, and I don't even know what a roll of sandpaper costs these days. I think somebody told me the other day it was $130 for a roll of 80 grit. And don't shoot me if I didn't quote the right number, because I'm so removed, I don't even know anymore. But, again, when you don't know, you don't know. And if you're just out there and you're using a piece of sandpaper at a 50% use and, tearing it off and going to a new piece and not thinking about the real cost involved, or you're hammering primer on because the body man left pinholes and you're trying to use primer to hide your pinholes or whatever. And I'm not saying any of this is correct. I'm just saying it happens. And it's a way to stay in front of it and to identify issues and help you be more profitable. That's the bottom line. If you're going to stay in it to win it, You want to make more money, and it's a way for you to stay in front of it to make sure that you are making all the money you can and not losing money and not having leakage.
Let me weigh in on a couple of things. First, I'm not at all offended, Laura, that you said it's very hard to find a good accountant. I frankly find that to have been a strong suit during my career, is that, you know, when you first come out of school, you think everything is black and white, and you don't really understand what you're doing. But ultimately, you come to learn that what you're there to do is take the financial information and communicate it and present it in such a way to the owners that it is of use to them. Most accountants take 5 to 10 years to get that figured out. And so that is really key. It is hard to find the right people. And I think the hiring, the marketplace for even solid bookkeepers, not necessarily accountants, but, you know, if you can find a very solid bookkeeper, they'll get you 80, 90% of the way. And so that is important. And this isn't the forum for me to discuss best hiring practices, but let's just say I understand. I've had my fair share of people that I've worked with that it's like, oh my goodness, okay, no, ignore the small stuff. We got to focus on the bigger stuff. And not that this is any particular order, but when you just mentioned the cost of sandpaper, the cost can move in any business. The costs move and potentially quite quickly. And so you can't sort of like set your pricing based upon your current costs and then not look at it again for another year. It's worth pulling this information out. And as you point out, and I would agree, I've never met anybody that does their financial analysis or financial statement preparation of P&Ls. Anybody that does their P&Ls only quarterly, I look at and I think, oh my gosh, they have got, you know, what are they doing? Like, you can't run a business doing this. It's got to be monthly. And I like your idea of weekly in your line of business. Although I would point out that it's important to do that then using, without too much accounting jargon, the accrual basis is critical at that point rather than the cash basis. And if you're somebody watching this and you don't understand what that means, I'm not here to teach you that, but you talk to your accountant and say that we need to think about at least some of our analysis has to be done on the accrual basis. For the reason you brought up earlier, Laura, if you get a car finished and you've incurred all the costs for labor and materials, you probably paid for that in the last week or 2 or 3, parts, whatever. And you might not present the customer with a bill until it's ready. You may not get reimbursed for a while. So there's no sense, if that's the only car you worked on this last week, of course, that's not the case, but you would show a giant loss because you got no revenue and all kinds of expenses. But in the accrual accounting world, you would say, well, we earned X amount of dollars because we got that car finished. There's probably a few other things I could touch on that I've didn't jot notes as we were going, but I think you've got the main thrust of this is absolutely correct.
I know there's an article in BodyShop Business written by Laura Gay about accrual versus cash-based accounting. So look it up, folks. We'll figure that out. We'll get you we'll just visit the website basically and search for it. It's there. But I wanted to bring up this interesting, getting an accountant who can communicate. And you said can they speak the language? And I just took it for granted, like, okay, email, phone, face-to-face, that's communication, isn't it? It's not that easy. So if you were a collision shop and trying to find a CPA that has collision business experience, I mean, do some of these CPAs locally handle the accounting of several body shops? Would that be a way to do it, to go to a friend who owns a body shop and says, hey, can you refer an accountant to me? Or is that kind of bad business and they kind of hoard a good accountant to themselves?
Well, it's funny you say that, because my accountant, when I had body shops, I had gotten him from another body shop friend of mine. That's how I got him. And he's been my CPA up until about 2 years ago. And I switched to the M&A tax consultant that I use for my clients. And the only reason I switched is because he specializes in M&A and tax consulting, and I just felt it was a better fit for my current life versus, I don't own a body shop anymore. So I think if you got body shop friends in your state where you live, I think that's a great space to start. Start asking some of your friends that are in the collision space and ask them, who do you use? Do you like them? The other thing is go on Google and type in, accountant, and start looking at reviews and comments and things from people. I have found that I feel like a lot of accounting firms are starting to get and understand that people are tired of talking to accountants that they can't communicate with. So I feel like it's going to be a lot easier to find someone, even if they're not in the collision space. I feel like you could find somebody a lot easier than you could 20 years ago. I just think people are starting to get it. Accountants are starting to become more modern. They're starting to be more forward thinking, and they're not just, for lack of better words, doing tax returns anymore. They're looking at themselves as legitimate businesses that need to serve their customer and their customer's needs, if that makes sense.
Absolutely. Having industry experience would be better than not. But there's also quite a few skills. I mean, the communication piece is really separate than do you know how to do the books? Because you could do really good books, but not know how to communicate well. And that's one of the things we're bringing up, is that being able to communicate this information well to the owner is key. Whether or not you've got good books to start with is also very important, right? So having somebody that's got industry experience is quite important. Yet, as Laura points out, you could find somebody that's worked in other industries that are somewhat similar. Let's say that they manufacture something. They've got, let's say it's an HVAC business or a plumber or somebody like that. So you've got labor and parts, and maybe a roofing company would have insurance companies reimbursing them for damage from hail or whatever. And so those people are certainly going to be much easier to get up to speed in the industry of auto body repair than someone that's worked exclusively for, say, law firms or service firms or restaurants, because they simply don't have the same sort of cost accounting mentality.
Also, I might add Mike Anderson with collisionadvice.com. I mean, everybody knows Mike Anderson, right? Mike has some amazing information that's free on his website. And one of those things is a sample chart of accounts. If you got an accountant that, for example, you could communicate great with and whatnot, you could absolutely go on Mike's website, download his sample chart of accounts, send that to your accountant, and you could dumb that down some, because it is pretty thorough and maybe more thorough than what some people need. But it is a great place to start, and it certainly would help communicate what your needs are to your accountant, even if it's the existing accountant that you have right now. And like I said, Mike's got so many other great things on his website. So if you've never checked out Mike's resources on collisionadvice.com, you should definitely take some time to do it. A lot of great information can be found there.
Thanks, Laura. That's great, great advice. I want to thank you guys both for this great information. We can't talk about this long enough, because we know where collision repair's skill set is. It's in repairing cars, and they're not the best financial people, and that's not a knock on them. It's just not where their passion or skill lies. It's for repairing cars and pleasing the customer. And so this is really imperative. And whether you're looking to sell or whether you're in it for the long haul, you may say, well, I'm not going to sell for a while, so I don't need to clean my book. You do need to have clean accounting. You have to have it. If you can't measure it, you can't manage it either, that old adage. So this has been wonderful information. I thank you both.
Thank you so much, Jason. Truly do appreciate it. Hope you have a great rest of your day.
Thanks, Jason.
Thank you. You too. Thanks, Laura. Thanks, Herm. I'm Jason Stahl. Thanks for watching.